How's it going, guys? My name is Jared Ace and welcome back to MoneyMetEish. This is the August portfolio review where we're going to go over the MoneyMetEish EasyEquities portfolio and have a look at a couple of news items around some of the companies that we own. We will also be having a look at SATRIX's new Global Infrastructure ETF, so stick around till the end of the video when I give you my thoughts around the ETF in general and that IPO. But before we get started, please remember that I am not a financial advisor, this is not financial advice, this is a blank cup. Blank cups. Put your logo on my cup. Please also remember to like the video, subscribe and comment down below and ring the bell to be notified every time we upload a new video. So, August has come and gone, and our allergies are not the only things that have changed this month. The MoneyMetEish EasyEquities portfolio passed 60,000 Rand for the first time this last week, meaning it is gaining quite nicely on the portfolio which we hold with they who shall not be named. Especially since those Muppets have had our money for 4 years, and we've had MoneyMetEish for just under a year. Now, let's have a look at each account individually and see how they've done. The USA account is up an average of 2.1% from July, which is always a good sign, and we've seen some strong growth in most of our holdings, despite the fears around the Federal Reserve and the tapering or slowing down of quantitative easing. In a nutshell, the Federal Reserve, which is like the South African Reserve Bank but in America, has got to decide when and how they are going to slow down the release of money into the American market. And this has got a lot of investors feeling kind of uncertain. And we know that the market hates uncertainty. Jerome Powell would have made his statement at the end of the Jackson Hole conference between the time of recording and when this video gets uploaded, so I guess we just have to wait and see what's gonna happen there. The winners and losers for August in our USA portfolio are as follows. The stock that rocked in the USA this month was Nvidia, which is up 13.5%, while the mumish for the month is Amazon, which is down 9.78% for the month. And I guess it appears that if you shoot your former CEO into space, who rightly or wrongly is seen by a lot of people as the representation of all that's wrong with the world, it might not be the best thing for business. Just maybe. Now for the Tsar account. Our Tsar account is up overall this month by just under 3%, and that was brought down quite a lot by our two Ps, Process and Purple Group. The fast-moving consumer goods sector really did very well this month, with both Shoprite and Spar gaining more than 10%. Shoprite has been in the news a lot this month, and we'll get into some of those news items a little bit later. The winners and losers in the portfolio were Shoprite up 13.5% and Purple Group, which was down 8%. Process was actually only down 1% this month, despite the fact that our holdings are 10% down overall. Honorable mention has to go to Spar though, who did gain 12% this month. And now for our tax-free savings account. Our tax-free savings account has, for the third month in a row, claimed the crown of the biggest growth of the three portfolios, growing by more than 3% in this last month. And once again, it's not surprising because that's where we put the most of our effort. Our favorite ETF came out tops with the One Invest S&P 500 gaining 4.4%, while the Signia S&P 500 ETF gained 2.3%, giving us an average S&P 500 gain of 3.4%. This is over 1% more than the Nasdaq, which came in second. The mumish of the portfolio was the MSCI iShares Taiwan ETF, which ended down 1%. Zooming out and looking at the portfolio as a whole, the MoneyMetEish EasyEquities portfolio gained 8.9% this last month, but only 2.7% of that was profit. The portfolio rose from an amount of 56,746 Rand at the end of July to 63,445 Rand at the end of August, with our profits sitting at around 5,600 Rand. So August was a really good month for us in terms of our investments. We really saw some growth that I'm really happy with. We also had some banking issues, which meant we had to put more money into the EasyEquities portfolio than we had planned to, but that's not necessarily a bad thing. And now, onto the news. Shoprite made a few splashes this month. First, they announced that they are adding 2 new board members in Eileen Wilton and Peter Cooper, as well as releasing a trading update where their total sales grew 8%, and that is without liquor. They also gave updates on their discontinuation of their continental operations, i.e. them pulling out of other African countries. And if you want to read the statement, the link is in the description down below. Peter Engelbrecht's board also announced the acquisition of the Cambridge Foods businesses, Mass Cash, Cash and Carry, and Mass Foods businesses from Massmart for a total fee of 1.4 billion Rand. The targeted businesses are believed to be very easily integrated into the Shoprite system and culture, and they had an estimated 10.8 billion Rand of turnover last year. All of these news items contributed to the meteoric rise in Shoprite's share prices that we saw this month, and we are very, very happy holders. And now my thoughts on the SATRIX Global Infrastructure ETF. SATRIX is launching a new Global Infrastructure ETF on the JSE next month, and they are offering an IPO on EasyEquities, which expires at midnight on Monday. So here are my thoughts on the ETF. Firstly, right off the bat, this is one of, if not the most expensive ETF in either the Tsar accounts or the tax-free savings accounts on EasyEquities at an estimated, because this is an estimated TER of 0.8%. This is an estimated TER because the fund isn't listed yet, so they actually don't know how large the fund is going to be or what the expenses to operate the fund are actually going to be. But the ETF that this feeder ETF is tracking has a total expense ratio of 0.65. So it definitely won't be any lower than that, and I don't think it will go lower than 0.8 at all. To put this number into some context for you, the index which this ETF is going to track has a 1-year Rand return of 2.3%, and at a total expense ratio of 0.8%, that means that last year you would have paid 33% or 1/3 of your total returns as fees, which is just really high. If we expand that out further to the 3- and 5-year performances, you would have paid 5% and 8% respectively as your fees. Now this is a great time for SATRIX to be launching an infrastructure-themed ETF, and I'm sure a lot of people will want to buy in because they've heard Cyril talk about infrastructure endlessly for a while now. But firstly, this is a global infrastructure ETF, and its exposure to South Africa is less than 0.02%. So Cyril's plans, if they are ever actually going to materialize, aren't going to have any impact on this fund. Joe's, on the other hand, might have a very big impact, as North America accounts for 75% of this index, with 63% of that being in the USA and 12% in Canada. Now, the world's governments are going to have to spend heavily on infrastructure to reignite their economies after the global pandemic, but that funding and expenditure is not going to go on forever. So, if we did decide to buy into the IPO, I really don't see us holding this fund for a very long time. It would really just be to catch all of the hype in the beginning and then sell out, especially since the INFR, the infrastructure index, which this ETF is going to track, has performed 10% less every year than the S&P 500. And I always say, if an investment doesn't beat the S&P 500, there's really no point in us owning it, because we can do better by just owning the S&P 500. And there is no difference with this ETF. If you do want to participate in the IPO, it can be found under the New Listings tab on your EasyEquities app and bought in either the tax-free savings account or your Tsar account. 1 Rand will buy you 1 letter of allotment, but please bear in mind that 1 letter of allotment does not equal 1 share. There will be a conversion once the ETF is listed, which will determine how many shares you actually get. So please don't put 1,000 Rand in and think you're going to get 1,000 shares. You will get 1,000 letters of allotment, which will then be converted to shares at a different rate when it gets listed. So if you will be buying into this ETF, please comment down below, let us know your thoughts, let us know why you want to buy into it, let us know if you think it's going to be a good investment for the long term. Just let us know. So that's it from us for today, guys. Please remember to like, share, comment, and subscribe down below. Also ring the bell to be notified every time we release a new video. You can also follow MoneyMetEish on Facebook and Instagram and everywhere where MoneyMetEishes are. Join us next week where we will take a deep dive into Discam. Thank you for watching, and